Joining us now is Citizens Financial Group CEO Bruce Van Saun. Stock is up nicely, Bruce. How do you characterize the quarter relative to what the market was expecting? There was a little trepidation around these regional banks going into earnings.
Yeah, I think we had a solid quarter. We're still working against some of the trends with the Fed having raised interest rates so aggressively, but our net interest margin was stable. We're working on the balance sheet to make sure we have lots of strong capital position and liquidity position and reserves for our loan portfolio. And then I'd say one of the real bright spots that the market liked was the capital markets business has rebounded in a very nice way. So we've had 35% sequential quarter growth in cap markets fees, strong in M&A, strong in bond underwriting, bank loan syndication market coming back. We think that's the beginning of a trend for the year, so that's real positive. We also did a nice job on expense management. There were no surprises in credit, which was good. And then looking at our strategic initiatives, the private bank is off to a great start. We hit roughly $2.5 billion in deposits, so grew that by over $1 billion in the quarter. New York Metro continues to grow very nicely. And then we were number one in the middle market leveraged loan league tables, again, as a testimony to the strength of our capital markets business.
Yeah, I wanted to ask about that. So you seem to think that the capital markets activity is sustainable. Why and where do you sit at Citizens in terms of competition and market share?
Yeah, so we're very focused on the middle market. So we don't go all the way up to where the mega banks play. But when they come down into our space, we can win jump balls and beat them. So stay close to home and you can have a really strong franchise. We've expanded into some great industry verticals like technology with JMP acquisition. And we're also very focused on sponsors because increasingly private equity owns over half of middle market companies. So we've built out our overall franchise to be able to cater to the needs of sponsors.
Mm-hmm. So the net interest income, this is what everybody's so focused on, was down 12% on the quarter. We saw this across banks. What does that look like going forward with now expectations that the Fed won't be able to cut as much this year, more hawkish Fed, should be better for profitability, right, Bruce?
Yeah, there's puts and takes with that. So I think, the balance sheet position is relatively neutral for most banks now. So it's hard to call what the Fed's going to do. So you've kind of flattened out your position. So whether they cut or whether they hold higher for longer, it's not going to have a huge impact. I think what's going to drive net interest income over the course of the year is the amount of loan growth that we see. And so what we're expecting is the first half to be somewhat soft. Line utilization is a little low. We're not seeing new money deals happening. I think that changes in the second half of the year. We should see commercial loan growth. The other wild card that's unique to us is that we have our private bank, which already has $1.1 billion in loans to go with their $2.5 billion in deposits. And we think that'll grow significantly in the second half. So the volume side should actually start to help net interest income. And I think we can broadly keep the net interest margin about where it is.